Your exit taxes are on unrealized capital gains. So only the unrealized capital gains of holdings that you held less than 365 days related to crypto. Welcome to Crypto Insights. In this video, we're going to discuss exit taxes in Portugal because this seems to be quite complicated. Because when do you pay exit taxes and when not? And what if you don't pay exit taxes and you leave? How can they go after you? So these are questions that should be answered in this video. So with all of that said, let's jump into this week's video. So finding a law article that's easy to understand is already a job on itself. So I found this article from internationaltaxreview.com and I directly go to the exit taxes. So the new regime includes an exit tax provision for crypto asset holders. So they're talking about Portugal, under which a change of residency is deemed as a disposal event. So when you change your residence outside of Portugal is considered a sell of your crypto assets, except when the taxpayer of the counterparty is a resident in the member states of the EU, because within the EU you have a free exchange of goods, you can move anywhere you want, you can always reinvest within the EU, or the European Economic Area, or any other country with an agreement with Portugal that provides for the exchange of information for tax purposes. This is not the same as a tax treaty. So if we go to the Tax Information Exchange Agreements, the TIEAS, we see there is only 14 agreements that include Portugal. And these are mostly agreements with very small countries. I will put the link below this video so you can look at it yourself. So it's only European countries or countries that have this exchange of tax information, as you can see here. Then we go further in the article. The tax regime approved in November 2022 seems to be driven by the need to balance different interests along with the international and domestic political pressure. So the idea might have not come from Portugal, but from other countries. On one hand, the need to embrace a clear set of rules addressing the taxation of crypto assets, and on the other, the goal to keep attracting crypto investors and preserve competitiveness within the crypto ecosystem. The attractiveness of the new tax framework will essentially lie in the favorable tax regime that will exempt capital gains arising from disposal of crypto assets held for more than 1 year, so 365 days, and in the reduced effectiveness rate that will be levied in most cases on income obtained by taxpayers enrolled in business activity. So where do you pay your exit taxes on? Your exit taxes are on unrealized capital gains. So only the unrealized capital gains of holdings that you held less than 365 days related to crypto. Why do you have to pay this? Even if Portugal doesn't figure it out that you didn't pay your exit taxes, in the next country, when you want to cash out and the government wants to see your transaction, they just want to see that you paid your taxes before you move to that country. So if you leave a country, they might check you, but also if you move into the new country, they might check you. So it's not that you can just move and then you got rid of Portugal, that they couldn't come after you. They also have 4 years to come back onto it. So these are the reasons why you should do your exit taxes and when do you pay exit taxes. If you have any questions, I would like to see it in the comments. This is the end of the video and I hope to see you next week. Bye.